So, good day to you all. In today's class, I'll be introducing you guys to trading account. Just wait before you stop this video. You might think, or you might be thinking, you know trading account very well. You're opening stock, add purchases, add carrying well, this and that. But I'm obliged to tell you that you don't really know it. Now, after this video, you will testify to what I've said, that truly you don't really know trading account. Now, the format for trading account, actually the full name is trading profit and loss account. So, but this one that I've drawn here, that's on our board, is trading account. So when we now want to move to the rest, that's where we have gross profit, our expenses and other stuff. So, but in this class, we want to know why our format is like this, because for everything there is always a reason for it. Why is it that we are starting with opening stock? Why is it that the next thing we always do is add purchases? Why is it the next thing is add carrying word? Let's know the reason for everything, and that's why we are going to be breaking it down in this class. So before we proceed, if you know you haven't subscribed to this channel, the subscription is a red button below this video. Make sure you click on it and press the notification button so that when we drop more of our videos, you will get notified. Let's proceed. Now the first question is, what is opening stock? What do we mean by opening stock? Well, this is what we mean by opening stock. Opening stock is the stock of last year that is brought to this particular year. For example, before I proceed, let me say this. I won't be writing the definition here on the board, but as I dictate, if you need you need to write it down, and just pause the video and write it down and continue, because I won't be able to write in this video. Sorry for that inconvenience. So let's proceed. What do we mean by opening stock? Like I said earlier, is the stock of goods remaining for last year that is being brought to another year. For example, let's consider two different years and a particular seller. Now, this is from 2019 to 2020. Let's say the name of this man is Mr. Frank. Mr. Frank bought 30,000 goods in the year 2019. In the year 2019, Mr. Frank bought 30,000 naira goods. At the beginning of the year 2019, that means January, he bought 30,000 naira goods. So, at the end of the year, which was December, he has sold 28,000 goods. So remaining how many? How many? We have 2,000 goods, 2,000 worth of goods. Let me put it that way. So now, in the year 2020, January 1, you can't expect Mr. Frank to dispose these 2,000 naira goods. It's not possible, because it's the good stock of goods available or remaining from last year. So what do we have to do? We have to bring it to this current year. So that's why it is called opening stock, because the first stock you will have at the beginning of a year is the stock of last year. Now, this opening stock won't be enough for us to sell for the rest of the year, because only in year 2019 we sold 28,000 goods worth of goods. So why will 2,000 goods will be enough for us to sell in the year 2020? Is not possible. It can't be enough. This 2,000 goods can't be enough for us to sell in the year 2020. So we need to now buy more goods. That is why we always have purchases. Now, if you buy, for example, now let's say Mr. Frank bought 15,000 goods more to this 2,000 naira. Do you think it's going to add or subtract? Of course, it's going to add. So it will be the total worth of goods in the shop will be what? 17,000 naira. So that's why your opening stock first, now followed by your purchases. And why is there purchases? Because the stock of last year won't be enough for this year. So we have to purchase more goods. We add it to it. So all the stock of goods I have in my shop now is now worth 17,000 naira. Now, before I proceed, what do we mean by purchases in accounting? Purchases in accounting simply means when you buy to resell. Buy to resell. So that's what we mean by purchases. When you buy something to resell. For example, now if I have an organization where I sell books, for example, why I sell books. But I now need a motor van to deliver my books to all my customers. Now, if I now later buy the motor van, that is not purchases. It is not purchases simply because I'm not buying this motor van to resell. I'm only buying it for my goods. So I can use I bought motor van or bought motor van. That's direct. But it is not purchases. It is purchases when I stock my goods. I stock my shop rather. Stock it with books and everything. So that's purchases. Why? Because I'm purchasing to resell. So that's why you always see that we always have opening stock first, followed by purchases, because opening stock is the stock of last year we bring to this year. Purchases is the one we buy to add to the goods of last year so that we can have enough to sell for this year. So let's proceed. What's the meaning of carriage inward? Let's check that out. Now, what do we mean by carriage inward? What do we mean by carriage inward? What do we mean by carriage inward? First thing is our opening stock, second is add purchases, third is add carriage inward. Okay, what do you mean by carriage inward? Carriage inward is the cost of transporting goods from one place to another, from the place or from the point at which it was purchased to the place it will be sold. For example, let me give an illustration. Let's say this is Mr. Frank's shop here. Mr. Frank's shop is here. So, and this is where Mr. Frank do buy his goods from. Now, he came all the way from his shop to this point to buy the goods. Let's say he bought 15,000 goods, as I've said earlier. Now, you can't expect him to carry these 15,000 books on his head, or 15,000 worth of goods on his head, and trek to his shop. No. What if he's not capable of doing such? So, what did he need to do there? He need to hire a motor van to help him with it. Let's say at the later end, after hiring the motor van, he paid the motor van man 3,000 naira. This 3,000 naira is what we call carriage inward. That's why it is called carriage. From what is it called? Carriage inward. Carriage from the word carry, then inward back to his shop. Carriage from the word carry, then inward back to his shop. So that's why we have it to be what? Carriage inward. And now why do we add carriage inward? We add carriage inward because you can't expect Mr. Frank to be the one to lose this 3,000 naira. No. You can't expect him. So what is he going to do? He's going to add it to the goods he has bought and share his profit on it. For example, now let's say I bought goods worth of 1,000 naira and my carriage inward is 100 naira. So you can't expect me to now sell my goods 110. I will sell it at a price whereby it will be able to cover the cost of the goods and at the same time the cost of the transport, which is carriage inward. So that's why we always add carriage inward to purchases. So when we add it to purchases, we get this that is here. So carriage inward is the cost of transporting goods from where it was purchased to where it will be sold or needed. So let's proceed. Why do we have to less return outward here? What's the meaning of return outward? Now let's say after Mr. Frank, okay, let me define what return outward is. Return outward are the damaged goods that are being returned to where it was purchased from. Damaged goods, bad goods that we need to return back to where it is being purchased. That's what we mean by what? Return outward. So let's say I bought, after this carriage inward, I bought 15,000 goods and 3,000 out of it is very, very bad that I can't sell it. So what did I have to do? I have to return these 3,000 goods back to where I purchased it from. Then will I add this 3,000 naira to the cost of every goods I have bought before, or I will subtract? I will subtract, of course, because I bought 15,000 naira goods and 3,000 naira were bad. So I will subtract to know that what I have now is 12,000 naira goods to sell. So that's why after lessing your return outward, most time you have cost of goods available for sales. Cost of goods available for sales, because after subtracting the goods that are bad, the other ones, 12,000 naira, you are going to sell it. So I hope you understand that scenario played. But right here we have less goods withdrawn or destroyed by fire or anything. So what do you mean by this less goods withdrawn or destroyed by fire? If you check the comprehensive format, you always see this thing there. Less goods withdrawn or destroyed by fire. So imagine I went to purchase this 15,000 naira worth of goods, and when the vehicle was coming, maybe 200 out of the goods got spoiled, or 400 out of the goods caught fire, or when the driver got to the shop with the goods, I decided to remove 100 out of it for my personal use. So in that situation, we will less it. So if fire burnt 200, so I'll just say 15,000 minus 200. 15,000 minus 200 will give me the remaining, that's 14,800. So this 14,800 is the set of goods I want to sell. So I have to remove the one that has been destroyed or the one that have been withdrawn from it. So that's why we have this here. So when we less our return outward, goods that are bad, so we less goods withdrawn. Maybe out of 15,000 goods, 3,000 are bad, and I withdraw 1,000 goods. So the other ones is for sales. 15,000 minus 3,000 minus 1,000, that is 11,000. So this 11,000 goods, I want to sell it. So this 11,000 goods is cost of goods available for sales, and that's what I have here. Cost of goods available for sales. Now, after this cost of goods available for sale, how do we get to have closed stock to follow? So after subtracting our goods withdrawn and we have our cost of goods sold, how do we treat closing stock to get our cost of goods sold? For example, let's say I have 11,000 products to be sold. Don't forget what I said earlier, that we have 11,000 products to be sold. And out of these 11,000 products at the beginning of the year, at the end of the year, I sold 10,000 products. So remaining 1,000 products. Now, this 1,000 products now, the question is, if I should subtract this 1,000 from this 11,000, I will get the cost of goods I have sold. The cost of goods I have sold is 10,000 naira. So that's why we always subtract our closing stock from our cost of goods available for sales to get our cost of goods sold, which is here. This is our cost of goods sold here. So our cost of goods sold is 10,000 naira. And you should know something, that this my closing stock, which is 1,000 for this year, will be my opening stock for the next year. Will be my opening stock for the next year. I believe I've explained this before. I explained this at the beginning of this video. So this is my closing stock. The left goods that I did not sell for the year, so it will be my closing stock for the opening stock for the coming year. So now after arriving at our cost of goods sold, how do we get our gross profit? For example, we have sales here. Sales, let's say after selling all my goods, I make 20,000 naira. Don't forget that the worth of my goods I sold, it was 10,000 naira, but I make 20,000 naira. Now this 20,000 naira, let's say my customers returned 500 naira goods to me. That was bad. 500 naira goods, that was bad. So literally, I did not make 20,000 naira. I make 19,500. So this 19,500, subtract it from this 10,000 naira, it will be your profit. So we call it gross profit. I'll still tell us why we call it gross profit. So this will give you your gross profits. Now let me explain what we mean by return inward, and return outward. Very well. So when we say return inward, and when we say return outward, what does it mean? So return inward is also called sales return. Now why is this called sales return? Because, for example, if I'm selling goods, I'm selling 20 copies of books, I'm selling it out to this man, and after this man bought the goods, he realized that 5 of the goods were bad, so he returned 5. So this 5 he returned is what we call return inward. But something has to take place before he can return 5. Sales has to take place. I have to sell goods before you can return. That's why returning what is also called sales return, because before you can return anything to me, I have to sell something to you. So that's why it's called sales return. It's associated with sales, returning what. That's why you can see it here in our format, that you subtract sales, returning what from sales, and return outward is just the opposite. When I buy and I say that some are good, are bad rather, I return it outward. So that's what we mean by what? Return inward and return outward. So when you subtract your return inward from your sales, then the left out balance subtracted from your cost of goods sold, you have your gross profit. Now, after getting your gross profit, what's the next thing you will do? You open the profit and loss account. You open the profit and loss account. Your gross profit will be here. Gross profit brought down, let's say 19,500. So you charge it against your expenses. That's why gross profit is referred to as a fake profit. Why? Because it has not been charged against our expenses. There's a concept that follows that. It's called matching concepts. State that all our expenses should be matched with our income. So you can have salaries, wages, and so on. So here you can have discount received. For example, you bought goods worth 20,000 naira and you pay 19,500. Maybe the seller asked you to pay 19,500. So that's an income to you. 500 naira discount. So you can have income received. Anything that serves as an income to you. So everything will be here and all your expenses should be here. So you charge it against it. So you have your net profit. And you close it. So that's everything about trading accounts. So you have to understand how everything works so that you can be able to solve and understand what you are solving as an accountant, not just cramming all this formula without understanding the basis. So if you have any question, you can drop it in the comment section, and if you feel you've gained something or learned something from this video, help us and help yourself by clicking on the red button below this video, subscription button. It's free. It doesn't charge you anything. It doesn't buy it. It doesn't do anything. Just click on it. Thank you. Enjoy the rest of your day. Bye.